Give me your perspective on where we are, the $35 trillion elephant in the room.
Yeah.
And then,
Well, it's
and
it's
how do you,
amazing. It's amazing to me that nobody in Washington is talking about it. I think they're just pretending it'll go away, or they won't react until they have to react as a result of a crisis. I mean, in my mind and in my investment, views, I model it in my head, kind of using this fourth turning model, which we're in one, right? And the issue is money. And I think you know what I'm talking about. Maybe for listeners don't. There's a book called The Fourth Turning by Howe and Strauss. It talks about how every 80 years you have a cycle of a crisis cycle where the rules change. The last one before this was World War II and the Depression. Before that was the Civil War in 65. Before that was the Revolutionary War in 76, started in 76. And so every 80 years, kind of society gets thrown on its ear and a new set of rules come out of the other side. And I think we're at the end of the 80-year cycle, that started post World War II when we had fabulous growth and the United States was on top of the world. Um, and I marked the beginning of this fourth turning as 2008, because that financial crisis really kind of kicked it off, right? I mean, it was huge. It was worldwide. It was significant, and really the financial system nearly failed. And these cycles, they vary in length, and the model's not perfect, but if you look at them, it tends to suggest they last kind of 20 to 25 years. Some are shorter. The Civil War was shorter, although you could argue it started earlier than when the guns started firing. But the point is that if that's the case, that would imply that we will resolve this cycle sometime late this decade, early in the 2030s, and that kind of feels right to me. I think that they're going to continue to print money. I think that inflation is going to come back, and I think that as time goes by, more and more people are going to become aware of this as an issue. I mean, we're seeing, people like Elon is aware of it. RFK Jr. is aware of it. He tried to make Trump aware of it. I think he kind of is. I don't know that he knows what to do about it. But the point is that I think that it's going to become clear that the money is broken. As the title of Lynn's book. And as that becomes more and more clear, I think that we'll start to look for solutions. And it could be a monetary reset. That's what Roosevelt did in the 30s. It could be a slow transition, a gradual transition, hopefully a painless transition to a more sound money system. I'm not sure if, it's going to take real skill and real political leadership to pull that off, but it's possible. I think the alternative to that is we're just going to keep driving the car as fast as we can until something blows up. And, they have the big print where, the Fed balance sheet, if you noticed, is kind of, pre-08, it was at 900, billion. 08 kicked it off, and Bernanke grew it up almost to 4 trillion. Then they brought it back down a little bit, and then COVID hit, and they took it up to 9 trillion, brought it back down to 7. I mean, the next one, in my view, takes us to 25. And the good news is we might all end up being millionaires. The bad news is gasoline might be $20 a gallon, and a hamburger is going to cost $100. I mean that's kind of the way we're going, and that's why I say it's really just all math. I mean, it's in a debt-based system where you need debt for growth and you need to service that debt, and the underlying productivity and GDP is not growing at a rate that's fast enough to support the debt. The only way to fill the blank, or to make the numbers square, is to print more money. And which you can do, and we've done, and it's not uncommon. But by definition, you're not printing goods and services. So you print more money, you have the same goods and services. We're all competing for them. The cost of those goods and services is going up, and so that's the underlying problem. And really, there's nobody in Washington talking about how to address it or solve it, which is very unfortunate. But like I say, I'm hopeful that things like my book, other books, knowledge, I mean, even the mainstream is starting to say, talk about this a little bit more. I mean, you're seeing it creep into a lot of different discussions. And I think, in 5 or 10 years, it's going to be common knowledge that this monetary system is broken, and right, just completely broken, FUBAR.
I
And
mean,
so, right.
the revisions kill me. I mean, I just can't even.
Yeah, right. Oh, yeah. No, it's, look,
not,
don't get me started on government statistics. I mean, I like Saylor's view of it. It's just like, why do you pay attention to any of that stuff? It's all just nonsense. He's right. It's all just complete nonsense. I mean, arguably, we've been in a depression since 08. I mean, a lot of people have really suffered and continue to suffer in this economy. I mean, and yet the 1% continues to get wealthier because they print money to support the asset values that they have. So it's not good. I mean, it's really not good, and it's not hard to see. And I think you would agree, probably, I'm sure, in your interactions with people on day to day. At least the world is becoming aware of it, much more aware of it. I mean, and everyone reacts in different ways, but I mean, you've got this mob boss who runs the Teamsters, or the longshoremen,
Yeah.
and he's like, hey, you guys all got yours, I'm getting mine.
Oh yeah. It's crazy. Yeah. Don't watch what they say on TV. Yeah. You look at that guy's house or from the Google.
Yeah, right. No, exactly. But I mean, here's an interesting point. He was able to negotiate an 8% raise over, I think, the course of 6, 7 years. I mean, 8% is a long way away from the 2% target that the Fed holds.
Yeah.
So for the Fed to argue that look, they have to run a negative real rate environment for a long period of time in order to grow GDP to a point at which it can support the debt. They absolutely have to. And so, this is a point that's well made by Luke Gromen. And so, at the end of the day, they're going to, because they have to, they will. And what that means is, as Gromen says, is the sucker at the card table is the bond market.
It's a bond. Yeah.
And the bonds, I mean, who would want to own a long-term government bond in a government that is bordering on, if not completely bankrupt?
Right?
Yeah. I mean,
it's a nightmare.
It makes no sense. And so eventually the bond market will go the wrong way. In fact, I thought it was interesting. The Fed it just did its first 50 basis point cut, and yet the yields on the long bonds all went up, right? I mean, it's like, that's interesting.
It's interesting.
People are losing faith, right? And so, that's to me, I mean, the things, I've said this in other pods, the thing to keep your eye on is keep your eye on the long-term interest rates, keep your eye on the price of gold, keep your eye on the price of Bitcoin, eye on the price of silver, keep your eye on the dollar as compared to other fiat currencies. I mean, all of those things will tell you that the world is, how the world is waking up to the problem. I mean, I think Nick Timieros tweeted from the Wall Street Journal, he did a victory lap of how the Fed has landed the plane with a 2% inflation and they're cutting rates and everything's good. And I replied, I said, okay, Nick, if that's the case, then why is gold at record high prices?
Right.
I mean, gold is hitting all-time records in the 2,600 area. I mean, not that many years ago, gold was 1,360. I remember it well. So, gold's price has doubled here, in the last 5, 6 years, 7 years maybe now, and yet, they claim that we've got inflation back under control, and the gold market's calling bullshit on that. And I think soon the Bitcoin market is going to call bullshit too. And then we'll see what happens. I mean, we'll see what the response is to that.
Yeah, I love this. Like your this thesis here. Let me actually share this little thing from the screen. I did this analysis because I actually heard your Stefan Levere podcast.
Sure.
I'm going to share my window here, here. So basically, I pulled all this data.
Wow, looks interesting.
And I pulled the daily prices from gold, the S&P 500, and Bitcoin back to May of 2016.
Nice.
Basically, you made this comment. I was like, let me see what the data actually says.
Yeah, I'd love to see this. Yeah.
Of when it kind of Bitcoin sniffs it out. So basically what it shows is that the peak price that these things typically hit, when gold hits its peak price, Bitcoin typically hits its peak price 68 days later. But we all know the outperformance is significant.
Oh yeah, kills it. Yeah.
And then the lag between the Bitcoin and the S&P 500 is about 51 days. So gold moves first, Bitcoin moves second, and then the S&P 500 moves after.
That's great analysis. That's very interesting. I hadn't seen it put quantitatively like that. Nice work.
So this is kind of cool. That this is the every rolling 1 year period, right? This is what you're talking about. The outperformance is 221% over the year. And so it's going to take off faster. But it's interesting that the signal is actually in the gold itself.
And that's not because gold is better. It's just gold is different, and gold is more widely held, and everyone in the world knows and understands what it is.
Right.
So gold is very good at sniffing out monetary debasement. It's been doing it for hundreds and hundreds of years, right?
Right.
And so, look, I mean, what we see central banks buying record amounts of gold. We see, more and more countries interacting with each other, trading in their own currencies, and then net settling in gold, and not net settling in the dollar. I mean, and the U.S., a lot of this is self-inflicted wounds. I mean, the U.S., deciding to grab say whatever you want about Russia, good, bad, or otherwise. Grabbing $600 billion worth of their bonds, while it might have felt good at the time when they did it, it was really a stupid move because it basically said to the entire world, hey, do something the U.S. doesn't like, they're going to steal your money. And so people started, all the Arab states, I'm sure, took note of that. The Europeans, a lot of people took note of that, and they're trading, between themselves without using a dollar. The Russians are accepting the rupee from India for oil and gas, and the Chinese are, purchasing oil and gas with the yuan. And, if it turns out the Middle Eastern states end up with too many yuan, they can't buy enough things from China, they'll just net settle in gold and just kind of skip the dollar. And so, these trends are there, and I think are likely just to accelerate. And that's the thing. The thing about good investing is you've got to be able to see around the corner, and you've got to project these trends out multiple years. And, the nice thing about Bitcoin is we've got 15 years of this asset absolutely crushing every other fiat asset. Yeah. And so, when somebody says to me it's going to fall or it's not going to work, I'm saying, okay, why? Based on what's going to cause this to change? Explain it to me. Is the protocol going to fail? Okay, well, that would definitely be a problem. Is supercomputing going to come along and cause, all the private keys to be hacked? Well, that would be a problem. But absent something like that, I just don't see how this doesn't continue to become, to remain the best performing financial asset in the history of the world. And so to me, it's so obvious that, people need to own some of this. Now, if you can't stand the volatility, that's great. The way, any good investment manager will tell you, the way you deal with something that's too volatile, it has huge upside bias, or asymmetry, but is volatile, is you manage your position size. Mm-hmm. You don't put 100% of your money in Bitcoin. I would never counsel that for anyone. I have a lot in it, but it's not 100%. And, but you don't need 100%. If it's going to do a 100 bagger, or even if it's only going to do a 10 bagger, and you've got 10%, in Bitcoin, that's going to have a very meaningful impact on, your financial condition in 5 or 10 years. And I think a 10 bagger is assured within, I subscribe, and I know some Bitcoiners will shit at me for this, but I actually think the power law is pretty descriptive. If you look backwards, it's actually, had a nice R-squared correlation with reality, and it could break. All models are born to break, and it could break to the upside if we have hyper Bitcoinization. But absent that, at a conservative level, I very strongly believe the power law will predict the future price of Bitcoin. And, if you look at that, if you look at Fred's work or Giovanni's work, you'll see that, we're going to be at $1 million in 10 years. We're going to get there.
Hey, if Bitcoin hits between $160,000 to $240,000 a coin by next year, you're going to want to make sure that Bitcoin is safe and secure. And the best way to do that is to master your self-custody skills. The number one place that you can find a one-on-one expert and coach to help you do that is thebitcoinway.com. Their experts and specialists will help you to navigate the journey into self-custody, managing your privacy and your cybersecurity, whether you're just managing your own wallets, whether you're running your own node, so that you can maximize the number go up technology of Bitcoin, but also the freedom go up technology of Bitcoin, which is just as important. Schedule a free consultation with their team today at thebitcoinway.com.